Welcome to Apadmi Asks, where we ask the questions which aim to spark conversations around the world of technology. A valid kind of first question might be, well, why are we doing this? Well, Apadmi is a digital product company and we're fascinated by the role of technology and the way it plays a different part in lots of people's lives. And we try to ask questions that are hopefully going to help with that. And the question that we're talking about today is digital making some banks more equal than others? But I guess the first thing to do is to introduce our guest who's going to help us with that conversation, which is Chief Product Officer at Chetwood Financial, Julia McColl. Hi Julia, how are you doing?
Hiya, I'm good, thanks. Thanks for having me.
Well, it's lovely to have you. So a bit about you, you're previously from Capco and then had a long stint at Lloyds Banking Group. Definitely, I think we could put you in that category of calling you an expert in the world of digital products. But do you want to talk just a little bit first about what Chetwood is and what you do there?
Yeah, of course. So Chetwood Financial, we're a fully licensed bank. So we have a full banking license, but actually we have a really different business model, which is one of the things that first attracted me to go and join. I was actually employee number one, so they're right at the beginning. And we are very focused on helping to find underserved segments of customers to help develop products for. So it's essentially a multi-brand, multi-product business. We have 4 different consumer brands out in market today. And we also offer banking as a service and software as a service to other clients, either in FS or out of FS. And we do that through our core banking platform, Ubota. So really interesting business. And although we are a bank, we're kind of not a bank, I guess, in terms of that traditional banking model.
Definitely firmly in that sort of financial services category, which is why it makes it an important part of the conversation for today. So part of what we want to do within Apadmi Asks is actually ask the same 3 questions of all of our guests, which I think we'll talk about a little bit first before we then get into the depths of digital products in the world of financial services. So starter for 10, first question, which app do you use the most on it personally or professionally, but I guess just to get a sense of the kind of products that you love using?
Yeah, and I was thinking about this, and obviously there's loads of work ones. Clearly, the Wave app that we built with Apadmi is a firm favourite. But I think outside of work, I was really reflecting on, I guess, the apps that have changed the way I do things. And one of the things for me is, if you take Citymapper or Google Maps, even when I think back to even when I first came to London, say 15, 16 years ago. I literally started with an A to Z in my, one of those mini pocket-sized A to Zs in my bag. And, new to London, not growing up in London, trying to find my way around, absolute nightmare. I don't even think about it now. I appreciate it's more valid for people in cities than perhaps if you're doing the same sort of route to work every day. But, we step out of our houses, we know we've got our phone, we know that we've got these apps that can help us to find the quickest route, the best route, to help us manage whether there's traffic or there's tube strikes or whatever it might be. And I think the confidence that gives you to just go out and walk more and to get to different locations without, as I say, needing to sort of plan or print or take physical paper, actually, it's become something we totally take for granted. It's just so embedded in day-to-day life that I don't even think about it. But when I reflected, it's probably the thing that's really shifted how we operate, certainly for me anyway.
It's that classic pose, isn't it? You step out of any station or tube or wherever you arrive somewhere, probably not even having looked sometimes, straight out with the phone.
Yeah.
And if there's no signal, you can be a bit stuck, but it's that reliance, isn't it? It's that real need to kind of go, well, that is your way of getting around. And I guess which leads quite nicely on to question number 2, which is sort of linked in a way around, is there a piece of technology that you can't live without? And that doesn't necessarily need to be a piece of software, it could be hardware as well. But clearly our phones, everybody's reliant on our phones. But is it that, or are there also other things that play an important part in your life?
Yeah, I think the interesting thing is these things just become part of our life, don't they? So, if you think about, if we go back far enough, there will be people who lived without electricity and, lived without all sorts of things that we just totally take for granted. And I feel like the next generation will be like that about a phone. They won't even think to say, oh, I couldn't live without my phone. But as you say, as soon as it dies, as soon as the battery's gone on it, as soon as we've not got signal, people just totally collapse. And I guess, even in my lifetime, moving from kind of dial up to the level of Wi-Fi connectivity that we have today, the fact that we can stream videos and download content and, you know, pretty much anywhere, in any coffee shop, in any retail, anywhere, we can actually get access to connecting to people halfway around the world. So I think there's something for me about that connectivity and I guess the infrastructure that's been put in place to allow us to just seamlessly connect with people all around the world through lots of different methods. And I guess COVID was a really great example of that, because we all, if COVID had happened, or, you know, I know there were lots of analogies back to world wars, which, you know, I think was probably a bit of a stretch in terms of, I'm not sure COVID was quite that bad for most of us. But I do think it allowed us to stay connected with people that we loved, and it allowed us to do the social element. You know, even as a business, we kind of doubled our headcount in that period, and we were able to bring people in and do the new joiner inductions, do the social side of that as well. Not saying that virtual drinks is quite the same as physical drinks, but, you know, you can really replicate a lot of social norms, I guess, through the technology that we have. So for me, it's probably less about any one piece, and it's more about just that ability to communicate and connect with people, which comes through a number of different devices or different infrastructure, as I say.
And it's the way that plays out in all walks of life, isn't it, as well? Because clearly COVID was a massive accelerator in terms of moving habits and processes and ways of working, and it would have been much harder if we didn't have that connectivity. But the role that technology plays across the board, whether it's comms or it's logistics or it's, you know, most businesses are being touched by this. And that's, I think, the thing that's really interesting about this. And I guess that kind of brings us back into the world of your area of expertise around financial services, because technology is playing a massive role in that. Are there anything, we'll go on to talk about the specific question around, you know, the role it's playing in terms of levelling out the financial services playing field, but are there things that are happening or having more of an impact than others in terms of the industry currently?
I think the interesting thing over the last 5, maybe 7, 8 years is we've really started to see that fintech bubble pop up and materialize. And I think, you know, there were the initial challenger banks. Obviously, they're the kind of ones that often get talked about. But actually, I think the thing we look at more in our businesses, there are so many niche businesses popping up to serve very specific use cases in the fintech space. And that's something I think is hugely exciting, because we know that, you know, there are lots of financially excluded people. There are lots of people who still don't fit the mold of, say, a big bank's lending criteria. You know, they're perhaps just outside that. And so, you know, it's very aligned with our business model, but I think you can really see that acceleration and that the number of volume of new startups in that space has really started to increase dramatically. So I think that's probably the most exciting thing, because I think that pushes the whole industry on. So it's a really good driving force, I guess.
Which does bring us nicely into the kind of the key question that we thought it would be interesting to talk about today, around this idea of how digital is making some banks more equal than others. And clearly that's a take from the George Orwell novel Animal Farm about, you know, the equality of animals and some becoming more equal than others, 2 legs, 4 legs, etc. But I think that the original thinking was that there was a massive move towards the disruptors of the likes of Starling and the likes of Monzo that did kind of change the game a little bit in the world of certainly personal banking. And they managed to get a bit of a march on, you know, some of the more traditional banks. And I think the thing that's now interesting is clearly the high street, if you can still call them that, given that lots of branches have closed down, but the more traditional old guard has clearly adapted and therefore made great strides of their own in catching up with these you know, kind of young pretenders, if you like. And I guess the thing that's interesting is that that digital is the one that's kind of leveled that playing field again, because they have caught up and they've got great products of their own, but they've had to do it and in a way because they've responded to the competition that was in front of them. And that in itself is interesting. And I guess the first question, therefore, is that, there was a very interesting quote from the Starling CEO, Anne Boden, about saying that, well, she thinks that in 5 years' time, actually, Starling could be bigger than Barclays, which is a bold statement. But I think that idea that clearly you could come in and disrupt and take over just on the basis of what is effectively a really good digital product, how much truth do you think is in that remark? And where do you see the state of the nation right now?
Yeah, and as you said at the beginning, I spent a lot of time in a big bank, so I say this from a position of, I guess, knowledge and kindness to some extent, because I totally get some of the challenges that they face. And I think what's interesting is, I'm not sure they have fully caught up, but where they are catching up, they are essentially copying features. So I don't see a lot of the big banks yet really innovating or, designing new concepts or features for customers. I think there is a copycat mentality, and I think some of that is great, actually, because from a consumer perspective, they still have a lot of reach. Even people that are banking at Starling, most of them also have a big bank current account alongside it. And so I know that's something that Anne's talked about previously and is definitely kind of part of her radar. But, many of those challenger banks have that same challenge around how do you get that true adoption, that kind of one account model. And I'm not sure that consumers are really looking for that. I think we like the flexibility of being able to use the fintechs, the new pretenders, as you say, that we like to be able to do that in parallel with some of the safety of the services that we already have. And actually, from a customer perspective, that probably is the right answer, because there are things that Lloyds will offer and RBS will offer and Barclays will offer that, particularly some of the more targeted fintechs, they're not going to be able to offer that same coverage across the market. The big banks have a lot of advantages. We talk a lot about their disadvantages, but actually, their cost of capital is much lower. It allows them to offer products and compete in different ways. There are lots of benefits there too. So I guess for me, it feels like there's this real balance. And I think at a consumer level, whilst some of these challenger banks do want to take that whole share of wallet, I think at a consumer level, we want to be able to mix and match and find services that work for us from the people that are right for our needs at that time, but to have that flexibility then to move and to swap between suppliers as our needs change and as their products also change. So I think we're moving into a space where we'll continue to see people operating that way. And we do a lot of work with distribution partners like ClearScore and Money Supermarket, Experian. And I think, clearly we've seen a shift in how people purchase and research financial services products. And that's also important because the vast majority of the population aren't just going directly to their core bank anymore to look for products. They're going out to those marketplaces to shop around. And again, I think from a consumer perspective, that's got to be good. It encourages all of us to up our game, to make sure our pricing's right, that our credit decisioning's right, that we're ultimately serving and offering products to as many customers as possible in the market, which just drives better consumer outcomes, I think.
I think, it's interesting what you say about that kind of, it's almost broadened the market, hasn't it? Because gone are the days where it'd be like, well, I have my one current account and then I go there for most of the banking services that I need. And actually it's now the portfolio of products that most people will use will vary depending on what their needs are. And actually that list is getting bigger all the time, and there is room for people to play in those spaces, whether you're saying you've got your core current account where your salary might get paid in, and you might have your mortgage too, but equally you've got a separate app for tracking what your monthly spend is. You might use something like Revolut for saying, well, I'm going on holiday, so they're great for currency exchange. And actually it's lots of different products coming into play.
And there's been lots of talk about super apps, hasn't there? And I think, for me, it's an interesting concept. No one has landed it, and whether anyone really will, I think is very dependent on how well they can serve that range of needs. Because as you say, and we kind of set our business up around this purpose, right, which is find those segments, create very specific products and services, do that customer research and design it fully around their needs. but don't worry about everybody else. Be really targeted and specific about who you're looking to serve. And then, if there's another opportunity over here, then maybe that needs a new brand and a new journey and a new product, but really doing it at that customer level. And I think the challenge with some of the super app ideas is you've got to be really targeted around who that's for, but you also appreciate that people's needs do change, right? Our needs change massively over our lifetime. So how do you stay relevant, and how do you continue to be the place they want to go for everything? And I think it is much easier really to envisage a world where we don't, and we actually do, as you say, continue to just find people that are right for what we need at that time. It seems to make more sense to me in that way.
Do you think maybe that's also a part of a challenge for some of the bigger, older banks, whereby it's still one brand, and so actually it's harder to then say, well, can they be really good at everything? Whereas that actually, whether it's pension or whether it's help with spending, or you might go to different people for different things, and therefore having one master brand becomes tricky, because actually I've associated you with my foundation, and the other stuff, there's clearly people that can do that better.
Yeah, I 100% do. And I think, even when you think about how the big banks have approached creating startups within their own organizations, right? A few of them have done that. They have, I think, in every case, rebranded those products differently. So whilst they might associate with the traditional brand, they have created new sub-brands. And I think that's a really interesting model. For me, it fits really well, again, with our thinking, which is, you're trying to create something and differentiate something. And to do that is partly a colleague challenge around how do you separate it out from the rest of the bank in some way to create that innovation and that freedom almost to be different and to work differently, which again, they've all done. But then you've also got to position it differently for customers. And so I think that's a very conscious decision, I imagine, that they've taken to say, it doesn't help us to try and do this within our core brand. We actually want to separate it out and show that we can do that. The interesting challenge for all of them, and I've spoken to a number of people in each of those different organizations, has always been, at some point they try and integrate it back in, and they're consciously trying to protect it whilst they do that. But that's actually where it starts to fall apart, because it's really hard then, to set up something on the side and be different culturally and kind of create different norms is one thing. To then try and sort of fit it back into the organization it's in without killing the thing you've created is really challenging. So I think it's exactly that. And I think it's been interesting to see some of those experiments, I guess, in that space over the last few years.
And I suppose you've clearly got first-hand experience of that with the Wave app and Chetwood, in that they're essentially two different brands right there. And Chetwood is already doing things slightly differently in terms of the way that you're helping people to manage their money and spend it. But then you've got the Wave app as a slightly different proposition, and it makes sense to kind of have those doing slightly different things, right?
Definitely. And we always test it, so we never make an assumption about it will always be a different brand or it won't. We always test it with our customers. We always make sure it makes sense to create a new brand. We don't have a strategy that says every product we design will have a different brand. But when we've done that research, every single time so far, the 4 products, and we've got another one coming soon, so five brands that we've created, each of them have needed their own brand. And we're doing that in a co-creation style. So we're getting our customers to help pick the name, essentially choose the name, come up with the names, but also think about things like tone of voice and look and feel. And we don't have a prescribed view on that. We're very comfortable that we could create entirely different businesses actually with very different brands and different target markets. And where it gets interesting for us is then in the BaaS and SaaS perspective, so the banking as a service and software as a service place, we can work with any brand to help them think about whether they would do financial services as a standalone brand. So whether they want to create essentially an entirely new brand with us, which is what we're doing with our partner Mumsnet. So we are creating a new entity that will be tightly tied to Mumsnet and to Chetwood, but also stands on its own and has its own kind of purpose and values. And equally, we can white label and create within brands. So, we've been speaking to some retail organizations recently who are looking at how they set up essentially payment services for their retail clients. And we can do that under their brand, and it would feel seamlessly like their brand and their experience. So I think brand has a really important part to play in it. And for me, it's always about that clarity around target market and customer segment, and that should be the starting point.
And I guess to start to sort of sum up and as a final thought, do you think that digital experience or digital products that are delivering great customer experiences can be the differentiator? Like, they're playing a massive part in the decisions customers are making about who they decide to go with. Are they becoming almost the biggest factor?
Yeah, I think so. I think even though customers would not necessarily spend the time thinking about the journeys in the way that we do, right? So I don't think people reflect and say that was a great digital journey, but I think what they do say is it was easy. It saved me time. It was simple. I didn't need to contact anyone. There were no unanswered questions. I knew what I was doing at every stage. And I think there's a really important role for me around trust and confidence. And we know that, the vast majority of people in the UK are not financially educated to the level that we expect them to be. And that's true across all age groups. So there's a really important role around making it really simple, but making it really fair and making it really transparent at the same time, so that customers do know what decision they're making and they do understand what impact that might have then on their financial situation as a whole. And so I think the digital journey for financial services is one of the reasons I think it's so interesting, is because you have this complexity and this challenge around it isn't just a retail journey where it's all about speed, it's all about ease. There is this natural, healthy conflict that says you might also want people to consider certain decisions that are material for them in terms of their financial health. And so you've got this brilliant dichotomy, I guess, of trying to balance both of those things, but ultimately trying to get people to still come out the other end and say, that is really simple to use, and what a great experience, what an easy experience. Because ultimately none of us have time, right? None of us set aside 3 hours to buy a new credit card, or we're doing it at the side of our desk, and we're trying to squeeze it in 10 minutes before you're booking a flight to go on holiday, whatever it might be. It's real life situations, and people really just want that to fit and be seamless as possible. So I think it's a bit of a hygiene factor, right? People just expect it and demand it. I think what's interesting then on servicing is you really can differentiate with tools and with prompts and education, and some of that is comms and support, to say, how do you actually help that customer to make the right decisions over the life of that product? And they might not be with us forever. They might be with us for 3 years with a personal loan, or they might be using their credit card for the next 6 months. But how do we, within that time period, build digital experiences and allow them to manage their money in a better way? And that's the kind of interesting challenge. And yeah,
that's the piece, isn't it? That if you're getting that right, you're clearly going to win fans, because anybody is going to, definitely welcome the idea of managing your money easier. Because as you say, nobody really likes to do it. Well, thank you very much. That was a fascinating look at kind of where things are at within the financial services sector and digital products. A big thank you, Julia, for joining us on Apadmi Asks, and thank you everybody for tuning in. If you want to find out any more about Apadmi and indeed the work that we do with Chetwood, please check out apadmi.com, and we look forward to seeing you on the next episode.